Good morning. Today we're going to look at problem 10-2B, entries for payroll and payroll taxes. Okay. Looking at the same company, they've given us the list of salaries, the list of deductions, and some tax rates that we're going to need in order to calculate our entries for our journal. So our instructions, assuming that the payroll for the last week of the year is to be paid on December 31st, journalize the following entries. A, December 30th to record the payroll, and B, December 30th to record the employer's payroll taxes on the payroll to be paid on December 31st. Of the total payroll for the last week of the year, $30,000 is subject to unemployment compensation taxes. Okay, so let's do part one first, and then we'll look at part two. I am going to bring over, I'm going to kind of split my screen a little bit here. So let me pull over my Excel spreadsheet. I have two different screens I'm working on so that I can try to do more than one thing at once. So I have here, whoops, that did not do what it was supposed to. An Excel spreadsheet, which is in your working papers. Okay. And then we have the actual problem. So it tells us A, December 30th, record the payroll. So we know, whoops, oh my goodness. We know that our date, does it give us a year? It doesn't. So we're going to use the current year. And it's December 31st. Little Excel tip. If you can't see what it is you type, just click and drag until you make your cells big enough. And I apparently spelled the word December wrong. There we go. So December 31st of 2021, and we want to record our payroll taxes. So the first thing we're going to record is our salaries because that's going to be our debit. Okay. So again, I'm looking at this section right here, this salary section. I'm putting this into my journal as my debit. So I have sales salaries for a debit of $625, warehouse salaries for a debit of $240, and office salaries. That was my inability to type today, for a debit of $320,000. Okay, so those are our debits. Now our credits are going to be all of our deductions and also our payable account. Okay. So the first thing we're going to do is start listing our deductions. So the first one, and again, I'm looking right here on my textbook at my deductions. So my first credit is going to be employees' income tax payable. And I'm going to indent this because it's going to be my credit, employees' income tax payable. And this is going to be my credit for $232,260. And again, I just pulled the number from right here in my textbook. My next credit is going to be for my Social Security tax payable, but I have to calculate this one. It tells us tax rates assumed, Social Security is 6%. Okay, let me pull this over here a little bit. So 6%, I'm going to take this $1,185,000 and I'm going to multiply it by 6%. I'm going to type in equals 1185000 times 0.06, because that's the decimal equivalent of 6%, and press enter. And it tells me that I should have 71,100. And actually, I could do that right in here. I don't have to do that outside. Times 0.06. And that's my amount for my Social Security tax payable. Okay. My next one is going to be my Medicare tax payable. And again, I have to calculate this one. Drag that back to where it was. Whoops. I have to calculate this, and it tells me my Medicare is 1.5. So Medicare tax payable. Again, I'm going to take that 1,185,000 times 0.015 because that's my decimal equivalent of 1.5%. And press enter, and it gives me my amount. The next thing I have is my U.S. savings bond. My textbook tells me that's $35,500. And then my group insurance. And my textbook tells me that that one is 53,325. Now, one thing that I didn't do is I need the word payable after all of these because that's the actual account title, number one. And number two, I need to know that I still owe those amounts. Okay. Now, we can pretty quickly see that my debits don't equal my credits. If I were to add these up in my head really quick, just rounding, so 6, 7, 8, 9, 10, 11, I'm already over $1 million, and there's no way I have that amount over here in my credit column. So your debits and your credits always have to equal. So I'm going to credit my salaries payable account, salaries payable, for the difference between my salaries and my expenses. Okay. So I'm going to use Excel to do this. You can do it on a calculator and then just type in the number. It's completely up to you. What I'm going to do is I'm going to add the numbers of all of my salaries. Okay. And then I'm going to subtract all of my payables. And that is going to give me, whoops. Oh, I forgot some parentheses in here. Okay. That is going to give me my total, which is $775,040. Okay. So that is the amount that's going to go in my salaries payable account. That's the amount that I need to pay to my employees. So that covers letter A, December 30th, to record the payroll. Letter B wants us to record the employer's payroll taxes to be paid on December 31st. Of the total payroll, $30,000 is subject to unemployment compensation. So 31st, oh, this one was supposed to be the 30th. The 31st, I need to pay my taxes. So the first thing I'm going to list is my payroll tax expense. Payroll tax expense account, because that's going to be my debit. I don't know what's going to go in there yet, but I know that's my debit, and we always list our debits first. So I'm going to type in the account title, but I'm going to leave the number blank. The next thing I'm going to list is my Social Security tax. Thankfully, it pops right up there. We calculated that up above to be $71,100. You can calculate it again, or you can just bring that number down. And then my Medicare. Again, we calculated that above to be $17,775. And then I have my state unemployment tax and my federal unemployment tax. So let's start with our state unemployment tax payable. Okay. We have to calculate that. Our instructions say $30,000 is subject to unemployment compensation. So I'm going to take $30,000 and multiply that times, and if I look at my textbook, it says state unemployment taxes are 5.4%. So I'm going to multiply it times 0.054, okay? Because if I move my decimal twice, that's what I get when I turn my percentage into a decimal. And press enter, and I get 1,620. And I'm going to do the same thing for my federal. Federal, oh my goodness, unemployment tax payable. I'm going to take that 30,000, multiply it by the percentage that my textbook tells me. It says 0.8%, so that's 0.008. And press enter, and I get $240. Now, those are all of the taxes that I have to pay as an employer. So my payroll tax expense is going to just be the sum of all of these numbers. And again, I'm going to let Excel do the math for me. You're more than welcome to grab a calculator and add those together and then type the number in. So my payroll tax expense is $90,735. Whoops, I put that in the wrong spot. Okay, so there's what those first two journal entries for your payroll look like. Okay. The next one says, assuming that the payroll for last week for the year was to be paid on January 4th of the following fiscal year. Journalize the following entries. Okay. December 30th to record the payroll. Well, our payroll hasn't changed. Okay. Our payroll hasn't changed. Everything is still the same. So I am going to use my Excel features here and paste that from one spot to the other. Nothing's changed in my payroll. That is exactly the same entry as it was up above. Now, in a normal business with a computerized payroll system, it's going to automatically do that journal entry every time you need to pay your payroll, okay, which is pretty cool. Part B of this one says January 4th, they want us to record the employer payroll taxes on the payroll to be paid on January 4th. Okay. However, because it is a new fiscal year, all of the $1,185,000 in salaries is subject to unemployment compensation. So we are now in January. So we're in the next year, 2022. We're in January, and it is the 4th. Make that row a little bit bigger so you can see my year. Maybe. There we go. Okay. So much like this one right here, and I'm going to take these account titles and drop them down. I'm going to leave my payroll tax expense empty for the moment. My Social Security doesn't change. That's still $71,100. My Medicare doesn't change. That's still $17,775. This is the number that's going to change. Our textbook told us that the entire amount of payroll, $1,185,000, is subjected to these unemployment taxes. My state unemployment tax rate is 5.4%, so 0.054. Whoops, 4. So I get a total of $63,990. And I'm going to do the same thing for federal, but with the federal rate, so $1,185,000 times 0.008. I get $9,840. Again, our payroll tax expense debit is going to be the sum of our payables right here of all of our credits. So our debit is $162,345. Okay. Now, let me explain a little bit about that to you. I'm just going to make these, where am I going? There we go. Make these into some commas and no decimals to make it easier to understand. In this one, we only used $30,000 of the payroll, okay? In this one down here, we used the full $1,185,000. Employers are only required to pay a specific amount of unemployment tax when it comes to their salaries for the year. This entry right here was made at the end of the year. So we were to the point where we only had to pay unemployment taxes on that last $30,000. Okay. This entry was the first one of the fiscal year. Therefore, we had to pay it on all of the salary, not just whatever we had left over from the year. Okay. So that is problem 10-2B. When you get to your weekly assignments, you'll have you'll have a problem that looks very similar to this one. Okay. Have a great week.